I have done good deals and I have done bad deals. And looking back, the difference wasn't luck. It was whether all the ingredients were in place. Yo, what is up, party people? Today I'm going to break down the key components for what you need to consistently land good deals in multifamily, whether you're in Florida like me or anywhere else in the United States of America and beyond. So let's jump into this bad boy. Ingredient number one is price. Yes, no duh. Price is obviously crucial here, extremely important. If you get a huge discount, you're going to have a good deal as long as you can kind of operate, right? That's obvious, but chasing price alone can be a trap. So we got to talk a little bit about market cycles. Market cycles are crucial here. Sometimes you can't control the price, but you can control preparation, meaning you can forecast to a degree, obviously. If we're making a pro forma or a forecast, it's always a guess, right? It's hope in some sense of the form. But if we look at history and historical trends, markets shift over time. So if today you are in what's considered a down cycle, which we can consider this, you can assume that 3 to 5 or 7, maybe 10 at the most years from now, you're going to be in a better situation. So your pricing is important. Absolutely. You have to nail pricing, right? You got to get the best deal possible. But sometimes you might miss out on a deal if you're overly aggressive with your pricing and not really understanding where the market is going, because you have to bake that in to a degree. It's all in the back end. It's in your head, right? This is not something that you're putting on paper for investors saying, hey, appreciation is going to happen. I am going to value this property at this price point 10 years from now. And I know it's going to happen because historically speaking, this is what has happened. You can't say that because that's not valid and true. And that's not going to necessarily help you. And that's not being fully transparent and open and honest with your investor base. So if you are looking for investors like me, and if you do syndicate deals like me, or even if you're just looking for partners to help you with, meaning you're not doing these deals alone, right? Let's backtrack for a second. If I was doing these deals alone, I know how aggressive I can be, and I would be very aggressive on purchasing because I know the valuations are going to go up, whether that be 10, 20%. That might not be sufficient to hedge any losses or any risks or challenges that you're going to encounter, which always happen on holding a deal when you have investors' capital in place or partners' capital in place. My capital, if I had enough capital, I would be way more aggressive. Now, back to the point of purchase price and having investors' capital in place and forecasting to a degree where you're going to be in a certain amount of years. If we can all agree that today we're buying at a 20 to 40% discount, then at some point that discount will be back to where it was, right? Now, historically speaking, yeah, we usually exceed that amount, right? So you don't just go back to zero, right? Back to 100%, right? So if we're saying we have a 20 to 40% discount today, we're not going to be back to just 100%. We should, historically speaking, go above that. Now, you can't really bake that into your price. You can't say, I'm going to buy this property based on what I think it's going to be worth 10 years from now. You just can't do that. It's not good investing. And obviously, that's based on what people called smoking the hopium, hoping that that happens. Yes, again, historically, it happens. We're just not going to base our current price point on that. So, price today, when we're talking about how to price and value properties and go after properties today, you just have to make it cash flow under today's circumstances. Now, you also need to have fixed rate debt in place under today's circumstances, fixed for a certain amount of time. Let's call it 5, 7, or 10 years based on where you're at in the market cycle. And when you get that debt, you have to understand the prepayment penalties based on your exit strategy and where you are in the market cycle. If you're on an upswing and you think valuations are going to be crazy a year from now, you might want to go into a short-term product, which again kind of contradicts everything that we're saying right now. But it works to a degree for the right property and for the right price. So you might want to get into a short-term product. But when we're talking about investors' capital, and we're talking about how price needs to be important today, what we need to do is build out our business plan based on how we can operate and cash flow and make decent returns today under today's conditions while keeping us safe with the interest rate not fluctuating. Again, there are absolutely times when you want to incorporate short-term debt. I am doing that. I'm actively doing that. But again, that short-term debt is based on today's valuations. So what did I do? There's two products that I have with short-term debt. And what I'm doing is I'm buying at a steep discount for today's prices. So when I say there's a 20 to 40% discount in the market. I'm talking about from the peak of 2022, let's call it. What I am buying at with short term debt is a discount beyond that. Okay. So that's crucial to know. And if you don't understand where things are currently trading, then you don't know where the actual discounts are. So you have to be careful. And I highly recommend for somebody like that, if you are not 100% dialed into a market and the market cycle and you're fairly new, then I just recommend making a deal work today under today's circumstances and today's conditions, getting debt that is going to last you long enough to what you feel is the next market cycle shift. Now, again, that's hard to predict. So you want to get the longest fixed rate debt possible. If you are the type of person that is kind of new, maybe investing for a couple of years, you want to get the longest fixed rate debt possible so that can carry you through a market cycle if needed. But just understand your prepayment penalties because there are nuances, extreme nuances, and you need to understand those as well. So when it comes to price, you have to understand the price of the product. And price doesn't always get you the best deal because when we talk about price, are we talking about purchase price? Are we talking about all in purchase price? Are we talking about purchase price based on the valuation of today's cap rate or the cap rate after we force appreciation? And what is that going to look like a year from now, 2 years from now? There are a lot of things to consider. But ingredient number one for a good deal to wrap this whole little section up is price point. Obviously, you want to get the lowest price possible. Now, ingredient number two is crucial as well and can provide you with an upper hand if you have it. What is it? Money in the bank, peeps. Proof of funds. All right. So when I first started my journey, I had brokers asking me all the time for proof of funds. Now, people don't ask me that anymore, and they shouldn't be asking you because if a broker asks you for proof of funds, it's that they don't trust you and they don't know you. And if they're asking you, it's okay. It's one of their ways of weeding out the tire kickers, which there are so many tire kickers. And I feel for the brokers on this. There are probably people offering all the time and making all these false offers and falling out of contract. It's terrible. It is detrimental to our industry. Obviously, there are excuses and reasons to fall out of contract, of course, but by a broker requesting proof of funds, it's because they don't know who you are and whether or not you can close. The number one thing a broker needs to know is whether or not you can close. So, why is this ingredient so important? Money. If you have money and the broker knows you have money, whether that be through proof of funds or from proof of closing in the past, and you show that and you have a track record of closing deals, they're going to pick your offer price over somebody that they have never worked with or never heard from before or never received proof of funds from. Do you get that? So if we're calling price the number one ingredient, you can get a discount on that ingredient if you are known to be a closer, if you have proof of funds, if you are ready, if you can close quickly. But even if you don't have those things, you're not still at a total loss here. You can leverage a partner that does. And I've done that from time to time. When I was requested proof of funds, I would call on a partner who has those proof of funds. This is the guy who's doing the deal with me. This is the girl who's doing the deal with me. Also, if a broker needed to see something from me on the spot, I would pull up my bank accounts because I have a number of business bank accounts. Say, look, this is what I do. You can take a quick screenshot of it. Obviously, you don't want to provide any banking information or any data leaks, right? But you can absolutely provide a screenshot of what you have in the bank for your business. It's not your personal income. That's okay. But I highly recommend leaning on somebody that does have proof of funds. And don't run away from somebody that says proof of funds. What the broker is really asking you is, can you close the goddamn deal? Just show them how you can close it. What are you going to do to close it? Oh, I'm going to pull a line of credit from my house. I already have the funds in the bank, or my partner has the funds in the bank, and here's how. And I've closed this many deals in this year, or I've never closed a deal, but my partner's closed X amount of deals this year, etc. Okay, so I feel good about ingredient number two. Number one, price point. Ingredient number two, cash in the bank. Ingredient number three, broker and seller relationships. And this actually might be number one. If you have good broker and seller relationships, they are going to look to you first in what we call pocket listings, or even simpler than that, they might give you a phone call and say, hey, Nico, what's up? I have not built out an OM for this, but I got something on the line. This seller wants this price point. They're getting this in rents, and it seems like they did these upgrades in the past few years. Boom, I can come up with an offer price right then and there. And brokers love that, and they need that. Guys, nobody wants to go through the chaos of creating OMs, of building out a full marketing package. It might be too much work. rather than calling a trusted buyer that they've closed with in the past and they know how they operate. They can call on this person and say, hey, look, this might be a good fit for you. This might be a good fit for you, the seller. Let's get these people together. Let's make a deal happen today. Boom. So, how do you get good broker relations? Well, you got to be consistent. You got to follow up. You got to be open, honest, transparent, and you got to close deals with them. And if you have not closed a deal with them yet, you're going to lean on your partner's credibility, or you're going to lean on exact strategies of how you will close the deal and be very specific so that it leaves no gray area in the broker's mind. You got to consistently talk with them, follow up. Any deals that they put online for a broker, I'm speaking specifically, you have to underwrite them and provide some feedback and talk about how you like it. And that's amazing that they got the seller to sell this deal. It's a beautiful deal, but you're not going to buy it for X, Y, and Z. Those conversations are crucial. Now, if you're speaking directly with sellers, it is constant follow up and not just about selling their property, about what they're doing in life. You might have to go deeper and discuss other things and try to create more of a relationship than a business relationship, more of a personal relationship with a seller. Good. Guys, so get on it. Broker and seller relations are crucial. If you are not doing it, you are failing. Get off the couch, get on the phone, get on the emails, get on the text, and reach out to people and keep in touch with them. Don't just be that person looking for a transactional relationship. You need to be a little bit deeper than that. Moving on to ingredient number 4, operations and management. So good deals on paper can turn into nightmares without good operations. Property management is crucial. Systems are crucial, and execution of your business plan is the difference between the winners and the losers. I've done good deals and I've done bad deals. And the bad deals were based on two things. Number one was price point up front in a declining market. And number two was challenging operations for being my first really hands-on property in a very, very difficult demographic of our tenant base. That coupled with the fact that too much workload was put on me personally. And maybe I took that on myself. I can't blame anybody else. Sometimes I hoard and try to do as much work as possible. It's something I need to learn moving forward is to dish off work properly, because right now when I'm dishing off work, I feel like I'm doing more work, but I need to learn how to dish off work properly. But poor operations can kill a great deal if you bought it at a great purchase price. And on the flip side, great operations can help a deal that you paid too much for. So operations are crucial as well. You need to operate properly. That means you need to have the right team and systems in place. You need to go out there and vet your property managers. You need to make sure that they're willing to jump on calls with you weekly at the very minimum, especially in the first 6 months or so of taking over a property, sometimes more. So here's how I like to structure the communication between me and a property manager. I like to have a text chain with this person directly. And I like to be able to ask and answer questions daily to this person. Now, I also have weekly check-ins where we discuss with the entire team, and the property manager gets put on the spot to speak about our KPIs, where we are with leasing, where we are with delinquency, where we are with any projects that are ongoing, and where we are in our business plan, and then hold them accountable. And again, this is something that you shouldn't be just doing weekly. I like to communicate daily, sometimes more, sometimes less. You need great management in place. And if the property manager is failing, don't be afraid to pivot. And you need great operations and a great asset management team as well to oversee everything that is happening. So you need systems and you need processes in place. Ingredient number 5, my fam, is the creative tools and terms. What I'm talking about is sometimes seller financing might get a deal done at a different price point. Why? Well, because in seller financing, you can offer different terms. You're not subject to dealing with a bank. You can close quicker. You can negotiate maybe an extended IO period. You can negotiate anything. You can negotiate a lower interest rate. You can negotiate a higher price point with a lower interest rate or no interest rate at all for a year. You can do 0 down payment. You could do 50% down payment. The flexibility with using seller financing or other creative strategies to get a deal closed is insane. And I highly recommend it if the seller is willing and if the broker or whoever is communicating with the seller understands how to pitch it properly to the seller. There are a lot of sellers out there that are savvy on this and would love the process of doing it. So you got to just watch out for them and keep that conversation and dialogue open with the seller or the broker if you're dealing with a broker. Because price isn't everything, guys. You can get a good deal out of what looks like an average deal if you have the right terms in place. Seller financing can help you do that. Much more flexibility than a traditional bank or lender. Ingredient number 6 is your team, your infrastructure, having partners, asset managers, attorneys, contractors, lenders, insurance brokers. If you have all these people lined up and trust them, and it might take a few deals to weed out the best ones. If you have these in place, it will expedite everything. Being a lone wolf is nearly impossible in multifamily. You can do it, and I know people that do it, and I'm impressed by it, but maybe they're full time. I'm not full time, and I can't handle it. Building a solid team around you is your safe fall. Again, you're going to have to share in the profits as well, but you're also going to share in the risk. And that's crucial. Multifamily isn't a get rich quick game. I say it all the time. You're not going to do fix and flips and get rich quick and be out of the game. Yes, you can incorporate fix and flips, but if you're taking the proceeds from your fix and flips and you're investing in long-term, stable, cash flowing multifamily, you need a team around you. You need a team to build that. It's going to be years, and you need to build the right team. And you know what? It might take you 5 to 10 years to build that right team. But after those 5 to 10 years, when circumstances are changing, people's lives evolve and change, and partnerships grow or partnerships fail, you will find the right solid team. And don't be afraid to keep trying and changing and pivoting. But once you have that right team, you can grow together and you can grow quicker. There's that old common quote: if you want to go fast, go alone. If you want to go far, go together. All right, my peeps, don't forget that. Now, ingredient number 7 is your personal education and experience and your discipline. You have to say no to a bad deal. This was so challenging for me for the first year. I was so eager to jump into a deal that I was really just praying, waking up, meditating, praying, trying to manifest a deal into fruition. And I was pencil whipping the crap out of deals, just making them look good, trying to get something under contract. And you know what that led me to? That led me to a terrible situation where I messed up and I got a 20-unit deal under contract and I put $50,000 hard and I lost that $50,000. So you got to be patient. You got to be willing to say no. You cannot get caught up in the FOMO with everybody posting social media. We just closed a deal. Look at us. We're billionaires now. It's not actually true. And just back up off of social media if that's how you're feeling. Patience, guys, plus persistence is what's going to get you to real success. All right. So let me wrap all this up. We talked about a lot of ingredients to get a good deal. Number 1 was price. Number 2 is money in the bank. Number 3 is broker and seller relationships. Number 4 is operations and management. Number 5 are creative tools and terms like seller financing. Number 6, team and infrastructure is crucial as well. And number 7 was personal readiness, education, and experience, plus your discipline. So to summarize everything, good deals are not just one ingredient. They, my friends, are a recipe. Miss just one of these ingredients, and the whole thing can collapse on you. I want you guys to reflect on which key ingredient of the 7 that I just mentioned in this episode you are missing and start working on it. Me, cash in the bank. I'm going after it for the next 12 months. I also want you guys to share this episode with somebody that you feel would get value out of it. And if you do share it and nobody sees that you share it, please just know that I truly, truly appreciate it. And I'm thinking about you and I support you and I'm here to help you if you need any help. You can reach out. You could DM me on any social media that you find me on, as well as emailing me at info@smallactscommunities.com. If you want my epic deal analyzer, the multifamily deal blade, also do the same thing. Reach out to me and I'll send you a free copy. Guys, this thing is for sale, but I'm sending out free copies for those people that reach out. But all I ask is one thing. If you do get a free copy, please share it on social media. Share a post that you got the deal blade and maybe you like it or love it or don't like it and just explain why, what you think about it. I would love for that conversation to happen. If you want to join my private Facebook group where things are going down and people are beginning to network each other and build real relationships, hit me up and I will send you a link to that as well. I also have a link on my actual deal analyzer, which you could just click that link and you can join my Facebook group. Guys, go get deals, get them done. I love you because you're number 1. Let's go. Let's go. All right, and that's a wrap, Small Acts community. So I wanted to take a minute to say thank you so much for listening to the show. And if you liked it or got any value from it, it would really mean the world to me if you would share it with someone else and write a review. Remember, guys, keep sharpening those axes. Let's get out there. Let's crush it. Love you guys.